Hello ladies and gentlemen, welcome back to Dre's YouTube channel. Today we will be recapping our trades that took place on the 19th of January. This would have been yesterday, Friday, to close out the week. Before we begin, all of my charting took place on the TradingView application, and all of my trades was 0 DTE contracts. We was trading options. The strategies used, we utilized our support and resistance lines. We also utilized the bull breakout retest strategy. The indicators we utilized was the 13 and the 48 moving averages, as well as the 200-day moving average. And you will see at the bottom of the screen, we also have our MACD indicators and RSI. This is the SPY ETF, which tracks the S&P 500. You see, we started off the week. Here we go. We started off the week continuing off a rejection from Friday. You see that we made our way up to this 478.64 area. We got rejected off that area. We came down. We found support on Wednesday at the 469.77 area. We bounced off that, and you can see that so far we've been having a strong bull recovery. What I was looking for on Friday is for us to retest this 478 zone that we were rejected from last Friday, and taking us down to a smaller time frame. We will drop down to the 1 hour. I will show you my actual trade executions on the 1 minute time frame, but just to give you a bigger picture view, you see that Thursday, we ended Thursday evening with the bulls pushing up, and the market pushed us up to $476.61. Post-market Thursday, we closed around that area, and then pre-market Friday, you see that we break out. Excuse me. All right, so Thursday night, going into post-market, you see that we had came up to retest the highs from Tuesday, the 16th of January. We went into post-market looking like we was taking that level out. So pre-market Friday, you see we blast through that level, and that takes us into the 478.60 zone. And so when I saw this in the pre-market, I had created this zone right here. From when we broke out of the Tuesday high, it left a demand zone that I was expecting us to come back and retest. And also, I was expecting that to validate the actual breakout or not. Meaning, if we came back to this zone, this demand zone of 477 to 476.50, and we fell through that zone, that would tell me that it was a false breakout and not to trust the breakout. So, being that, let's bring us down to a 1 minute zone or 1 minute time frame. And it is, now that you all have a bigger picture, here we go. This is right here, Thursday post-market, taking us into Friday pre-market. This is the zone that I created for the, or that I identified as the demand zone. Because it is the pre-market and the post-market, the candles on a 1 minute time frame are not full. But say if I took you to the 5 minute time frame, for example, you could see that those candles are a little more filled in. Reason being is because the volume during the post and pre-market isn't as heavy. So we'll have some full candles and then some candles that are just flat. So with that being said, on the 5 minute time frame, you can see that in the pre-market on Friday, we did have some institution buying take place, or a lot of buying take place, that caused a small demand zone to be left. But also, this is the breakout retest zone that I was watching for as well. So if you're enjoying this content, please don't forget to like and subscribe for more videos. Thank you. All right, so here we are, 1 minute zoomed in, and we came up here in the pre-market. We hit this 478.62, caught a little rejection, but we held VWAP, climbed back up, conquered that level, came back, retested that level, fell through a little bit, got another bump. This time we was rejected from 479.50 area. So once we got that rejection, it hit us down pretty good. And as we opened the market on Friday at 0930 Eastern time, it knocked us all the way down and it bounced off that demand zone that I was watching. So as soon as we got the bounce off that zone, or not as soon as we got it, I was looking for the first sign of strength after the bounce on that zone. So we got one bounce right here, and then we came up, hit the 13-day moving average, which is this blue line. Excuse me, let me point out my lines really quick. My moving averages, this turquoise line is my 13. This purple line is my VWAP. The yellow line is my 48 moving average, and the red line is the 200 moving average. So you see that we double bottom off of this demand zone. As soon as we conquered that 13-day moving average, zoom in just a little more. As soon as we conquered this 13-day moving average and it formed a small bullish flag right there, I took a position going long. So I went long here. We went up, came up against VWAP and also the 48-day moving average, consolidated just a little bit. You see that we got a pop from there. We went up, smacked the 200-day moving average, and off that wick, actually we could just play it back really quick. Let me see if that would be better for you guys. If I just do the replay and then I actually walk you through it. Okay, here we go. So my circles are my entries and exits, and right here we are just now taking a position going long. You see my MACD indicator right here is pointing up, and so we're not crossing over the zero line yet. I'm not expecting a whole lot of momentum, but I am expecting some type of pop, some type of reaction. Also, our RSI is climbing down here. Our RSI is still below the 50. If it's below the 50, that means we're still in bear territory. And if we're above the 50, that means we're in bull territory. The bulls have control. So at this point, the bears still have control of the stock. However, I took the chance on going long right here, and let's press play. Right there. So you see that we had a strong bullish candle, and then it got rejected, forming a shooting star. So this tells me that the stock is probably about to come down, or a shooting star normally symbolizes a reversal is in process, so, or in progress. So right here I took profit from my first trade that I wrote up there, and that was a 38% gain. And we will continue to press play. You see the market came down, and right here we came down, it bounced off this zone again, but right here is forming what would look like so far a bear flag, and then we started to get strength. So I went long right here, even though it was looking like a bear flag. Also, we never did break the low from right here, and so I was kind of projecting what was going to take place, but basically that isn't good. It isn't a healthy thing to do. But being honest, I was projecting that this was going to play out to be a double bottom, and I once again went long. All right, we hit that 200 again, got rejected, hit the 200 for the third time and got rejected. So on the third time we hit the 200 moving average and we got rejected, I took profit on the second position that I took, and this time I got a 29% gain. I consider these scalps a little better than base hits. I'm just going in for some quick kills. So took profit on the second trade right there. As you can see, we're going up to touch the 200 for the fourth time. It's looking like a rejection. I press play. And right here, as soon as we came down, we tapped VWAP. I took another long position, you see the MACD indicator, it was coming down as if it was about to cross back under the 0 line, but it started curling back up. Also, the RSI is now in the 53 to was actually 62.5. So this means that the bulls now have control. So right here, once we tap VWAP, I went long, and I was out of it very quickly. So, all right, so I went long, came up on the 200 again. This time I had quite a few contracts, so I started to take profit. I didn't completely empty out the trade. Then we conquered the 200. We went up and we started to get some selling right here. And I had a stop loss in place. And so on that play, the first one when I took profit was a 18% gain. And then the second part that I tried to continue was just a 3% gain. All right, press play. SPY, it was strong all day. As you can see, it came back up to, this was actually a supply zone that it left the sell-off from pre-market, and we came up in that zone. We sold off. Then this 200 held as very strong support. We climbed it, and I'll pause right here. So right here, the SPY S&P 500 hit all-time highs. This blue line that I have here, if I bring you back to say a 1-week chart, and this is something that we have been waiting on SPY to do in the market all of 2013 or 2023, I'm sorry. So right here in 2022, our high was 479.45. We rejected off that high. We was in a downtrend for the rest of 2022. 2023 January is when we started to recover. We started to break back up, coming up. Took a nice little break in August through the end of October, and then we are finally here retesting the highs from December or January of 2022. So with that being said, going back to the 1-minute chart. All right, so going back to the 1-minute chart, we finally come up and we hit all-time highs. Now at the rate we hit all-time highs, the fact that we consolidated so much and we was building so much support throughout the way, all of our moving averages are finally caught up with us. I decided to take a long position, and as soon as I went long, you see that the market first came down, so I jumped in it very early. I was measuring this top right here. As soon as we conquered this high is when I jumped in a position, which was very soon. So press play, and right here we finally break out, creating all-time highs. And my stop loss, once we took this dip right here, my stop loss stopped me out. I still locked in a 3% gain. However, I'll just press play and let you be the judge on what I missed out on. And yes, for the rest of the afternoon, from what was this, 1 p.m. for the rest of the day, SPY continued to climb. And meanwhile, I stopped touching it. Reason being, I will stop this from here. So after I was stopped out of that play, I did not chase it any longer. It's best. Well, one, I did lock in some good profits. On Friday, I went for 9 for 9 on my trades. Also made a Netflix play that I will show you all. But you know, whenever you miss out on those opportunities, in my opinion, it's best to sit it out, or through experience. A lot of the times, whenever I chase something that, if I chase things that don't tend to go my way, and so with that being said, to each his own. I will show you all one more trade that I took on Friday. This was Netflix, and I did jump in Netflix also very prematurely. So same story with the S&P 500, the SPY on Friday. We started to get some strength in Netflix in the pre-market. Same story with me expecting the SPY to come back and test its breakout zone, or back test its breakout zone. I was also expecting majority of the stocks in the market to take a breather as well. Typically speaking, whenever the major indexes like the S&P 500, the Dow Jones, NASDAQ, if the indexes are moving in a certain direction, the majority of the stocks are also moving in that direction. Normally, you may have your onesies and twosies that are going counter trend, and that also plays a very key factor in a story that particular stock that's going counter trend is trying to tell you. For example, sometimes say if the market is coming down and a stock like Microsoft is showing strength, is showing that it doesn't want to, it's holding whatever support it's at. Chances are whenever the market turns around and starts to get strong again, a lot of money is being poured back into the market. Microsoft is more than likely going to be leading the way for, the stocks in its sector. So just a food for thought. With that being said, Netflix in pre-market, we came up here to test this 488, 89. And as the market opened up, it took a nice dump coming all the way down to 476.23. As it was dumping right here, I took a position at 477.91, 93. I definitely jumped the gun on that, but I was in this opportunity. I looked at Netflix as an opportunity. I know Netflix has earnings next week, and next week is a start to all of the big tech earnings. So with that being said, Netflix is going to be one of the major stocks to set the trend as far as if this earnings cycle is going to be positive or negative for the market. So with that being said, I'm projecting that Netflix will touch 500 very soon. I just don't know how soon. Nobody does. So I took a position right here in Netflix going long, a very small position. I did intend on averaging in. So when I took this position, we basically went sideways. We consolidated all day long. Right here, I averaged in, and we did not start seeing traction in Netflix until 2:30 p.m. And so Netflix finally hit this zone right here, which on the way down, a stock will leave you clues on whenever it comes back, how it's going to come back. For example, if you look at Netflix, when it took this dump Friday morning, you see right here, it caught a little support. It dropped the entire leg, well, two legs, I would call it right there. And it found some more support, dropped another leg. And so where it's finding support at is telling you this is going to be your next line of resistance on your way back up. So on Netflix right here at 480.64, I'll just leave my cursor right here. You can see that as you come across, we found resistance right here, got rejected, resistance right here, got rejected, resistance right here, and we finally caught some type of break, but that was a false breakout. We fell back under, come back over, we finally break out. I closed my position right there. That was a 3% gain. With that being said, this zone right here, as Netflix was coming down and you see where it found the support, as you come across, you can see all of the resistance that it then played right after. And then when we finally broke out of that zone, out of that resistance, you see that we came back and we back tested it right there, and then it's off to the races once again. Netflix is stair-stepping very slowly. However, from looking at the clues that it left, you can see right here at this 483.64, that will be the next line of resistance, or coming up a little more will be this 484.77. So with that being said, just keep an eye on what the stock does, the strike prices. Everything is serving a purpose. It's telling you something. It's just a matter of, depending on which strategies you implement, which strategies you utilize to trade, it might not be as important to you, but if you take charting seriously, you definitely want to pay attention to the strike price. All right, so all together, as I said, we did 9 for 9 on our trades, so we did have a smooth trading day. However, we do have a few things that we got to tweak, a few things that we got to work on. As I said, with Netflix turned out to be a very small gain. However, we jumped in Netflix way too early, and we projected a lot on Netflix. So with the SPY, we actually played the SPY very, very well yesterday. I did not overstay my welcome. In a lot of cases, I felt like I could have actually, rode it a lot longer. But at the same token, as you can see, as the day started off with the SPY, it was very volatile. It was going up and down. Overall trend, when you zoom out, you can clearly see that the trend was up. However, say if we did fall through this demand zone or this breakout retest zone that was created, that could have been a nice fall that came right after. So, we definitely played it safe, and we profited on that. So with that being said, if you have any questions, please feel free to leave them down in the comments. I'll try my best to get back with you. Remember, I'm just here to share some ingredients. It is up to you to create the recipe for your journey to financial freedom.